Next up, this handsome gentleman is Brian from ZK Land.
Hello, hello. Cool. How's everyone doing? Great, great, great. All right. So this should actually be our introduction to Starknet, or talking about a little bit what is Starknet about. But I'll jump a little bit in and going to talk about DeFi on Starknet first, and then you can start talking about some of the cool technology and also the account extraction and every cool aspect of it in the later session. So a little bit about myself. I'm Brian. I'm one of the co-founder of ZK-Land. What ZK-Land is we're building a money market protocol on Starknet for basically borrowing and lending for permissionless DeFi users, and we also want to tap into the institutional part of things as well. A little bit about myself. I actually worked in the TradFi space for quite a bit of time. Before starting ZK-Land, I was in a private equity firm managing a real estate fund. And then before that, I was with Standard Chartered doing investment banking, did quite a fair share of IPOs, M&A, and things like that. Structured credits being a core part of it because it's a lot of real estate deals at the time. And then before that, I was with financial markets doing FX trading, FX option structuring, and also credit trading risk for a little while. And before that, Bloomberg. So that's a little bit about me and where I'm coming from. And I joined the space, I would say, around 2020, late 2021, very, very late. But I actually got the hint that there's a lot of going on in the DeFi space and also institutional adoptions, which is why I really want to come in, join professionally, rather than just staying on the sideline and looking at builders build. So the current space of DeFi right now, if you go on Twitter, you would see that it's very binary. When it's BTC over $27,000, people are happy. Crypto is so back. DeFi is good, gonna make it. And then as soon as it drops below 27,000, you would see people go, oh, not gonna make it. Crypto is dead. DeFi is shit. Which is, I mean, kind of true because DeFi seems to be a narrative that has been a little bit overspoken and has been not having a lot of innovations, real use cases for quite a while. A lot of people are using it for yield farming, a lot of speculations as well. But I think what we are currently looking at, it's still a very early stage and only scratching the surface of DeFi. And what I'm going to talk about today is that how are we going to use Starknet to power the next version of DeFi? So I think for DeFi, there's still a lot of space to grow. And for DeFi to grow into the future, you need a platform that has a lot of space to grow as well. And for this slide, I specifically want to talk to you about the promise of Starknet to support DeFi. Just a week ago, we seen that Vitalik has issued a paper, the 3 transitions for Ethereum. And the 3 transitions talks about 3 things that it's on the ecosystem transition triangle. And these are L2 scaling, smart contract wallets, and privacy. So for L2 scaling, he says that if you don't have L2 scaling, transaction is too expensive, people will use centralized workaround. For smart contract wallets, it's if you don't have a smart contract wallet, if you still use EOA, use a DOM wallet or a traditional wallet, let's say, people are not going to be comfortable putting your funds or your NFTs or whatnot into your wallet. It's not intuitive. AMTs won't use it. So people aren't going to use it, and then they would just swap to centralized exchanges. And without privacy, a lot of our users or even institutions, they're not going to start using DeFi because using DeFi ultimately gives up all your securities, gives up all your data, gives up all your transaction details on chain. And this is quite a bit of privacy sacrifice for a lot of users. And they would go for centralized options, which would at least somehow mask their identity or mask their privacy. So with Starknet, it's actually a very well-rounded solution. It's also a future-proof solution that actually nicely solve all these transitions hurdle or bottleneck. So for the first one, it's Starknet being a layer 2 solution, it uses CK Stark as a CK-proof empowering component. And we've seen a little bit of comparison or competitions between, let's say, CK Snark and CK Stark and all these other different proof algorithm as well. But what I can say is that CK Stark is technically built for the future because of two components. One is that even though the proof size itself is a lot bigger, it has a more scalability properties to it, so that in terms of increasing speed and in terms of increasing transaction data size in the future, it has a lot more scalability compared to all the other components. And the second thing is because it doesn't have a trust setting compared to CK Snark, it's quantum resistance. So in the future, let's say your computing power becomes a lot more powerful, it's still going to be secure as day one. And the second thing I want to talk about is the smart wallet. Starknet uses native account abstractions. So what that means is all your wallets are smart contracts. So what that enables is it enables your security abstractions, meaning for all your private keys and things like that, it's becoming abstracted away, and you can use a wallet that is seedless, and also you have social recoveries for extracting all your private keys. So there's no one event where, let's say, losing your private keys would meaning that losing every funds in your wallet as well. And the second component is that for the smart wallet itself, account abstraction makes it programmable, and also it's secured. Programmable component meaning the wallet itself, it's now able to take on different code, different business logic behind it. So what that means is there are currently already available, it's, let's say, multi-call. Multi-call is powerful because, let's say, you want to make a transfer from, let's say, layer 1 to layer 2, and then you want to swap it, and then you want to put it in a wallet, in a lending protocol, and then being able to earn interest from it. Right now, you would have to do, let's say, on Ethereum, do a few transactions to do this entire thing. But what if later on, you will be able to basically program all this in one single spot, and then just sign one single transaction and get it all done in one single movement. And that actually is a lot more user-friendly for even for crypto-native users and non-crypto-native users. And the last thing I want to talk about is for the privacy. Starknet actually, it's not built to provide privacy. It's a secret rollup, or they call it a validity rollup. It's particularly focused on the scaling component of it. But actually, because it has the option of layer 3, and also one thing I want to talk about before layer 3 is by by 2 versions later, there will be the options of using volition for data availability options. What that means is for your data, you can either store it on-chain on layer 2, and then basically use a roll-up options to put it onto layer 1 for security. Or you can choose a Validium model, which basically put all these data in an off-chain mode, where right now there's a DAC, data availability committee, that store all these data. And what this enables, it's kind of a masking of data, so you don't have to show the public the exact data structure that you're using, the data that's supporting it behind it. So it's kind of it has a privacy component added on top, but without the regulatory issues or being seen as a mixer. And then the second thing is that because Starknet powers layer 3, and layer 3 using, for example, things like recursive proof, so that it actually becomes your proof on layer 3 becomes combined with all your proofs on layer 2, and then goes back to layer 1. So the layer 3, you can have custom layer 3, and you can have different whitelisting component properties, and also a privacy component where you can put all these data and then put it with the actual operator of the layer 3, or put it with the DAC. So understanding this 3 fundamentals of Starknet and how that basically benefits DeFi, Want to step back a little bit and talk about the state of Starknet right now. So for Starknet, it has been live since November 2020, I would say. 21, I'm sorry. Thanks. And then since then, actually, we have had a huge growth, I would say, particularly in 2022 and the beginning of 2023, where a lot of project actually starts building. And this is actually just some of the projects that are building right now. It's being supported by Starknet fans. I just take a screenshot of it. Right now, if we look at Starknet ecosystem, there are about 100 plus projects building on Starknet. About 46 of them are infrastructure, 61 DeFi, and so forth and so forth, which is fair because as a early ecosystem, you need a lot of DeFi, you need a lot of infrastructure components to start building on it and supporting it to make it better. And for the live projects, 61 of them are live right now. Majority are still infrastructure, but actually 23 DeFi projects are live right now, including CKLand. And so you can see that DeFi is still a core and very fast-growing narratives within the Starknet ecosystem. In terms of TVL on Starknet, it's actually not the biggest chain or anything by any size, but it's growing and it's growing fast. Right now, I would say that would be early this week. The figure it's at around 62 million for TVL on Starknet. Transaction-wise, about 5.5 million for the past 30 days. But what is interesting to see is that if you look at the graph here, you would see there's a huge growth right there around March 2023. And what that actually event is, it's the release of version 0.11, which is the transition of Carol 1. And right now, we're kind of flattening out around 61 million point at the moment. But there are two things I want to highlight for the end, before the end of this year. The first thing is by, I would say, around middle of July, there will be the version 0.12 coming out. And that's going to be increasing the TPS because the sequencer is going to be getting upgraded. So TPS will increase substantially. And what we expect basically at the point of around July, going forward a month, we'll see another growth going up. And then by September to October time, which is where the regenesis will comes in, the Carol 1 code will basically take over and replace all Carol 0 code. That is a great event. Basically, we would expect a lot of projects coming out. Right now, there are around 64 projects coming out live on Starknet, right? I would expect double that by that time. And I think this fact can be kind of proven by how busy Nethermind team is working on in terms of the auditing work and things like that. So by that time, a lot more projects will be coming out. So user base will grow substantially. And I think this number will be a history. Basically, at this point in time, or even at 61, we'll be hoping to see anything more than 100, more than 200, and it will be growing substantially going forward. So currently, the evolution of Starknet DeFi right now, I would say we're still at the first two bucket. A lot of transactional projects have been launched. So what I mean by that, it's basically you have the wallets, Argent and Bravos, to support basically all your funds coming from L1 to L2. You would have Chainlink. It's expected to come on towards the end of this year. It's not there just yet, but they have plans. Pragma, it's another oracle that is live on Starknet, so basically providing prices for a lot of protocols using DeFi, using Starknet and DeFi on Starknet. And then we have a lot of the AMM, the swaps, and then we have the lending protocols. I call these the fundamentals or the transactional protocols on DeFi because you would need to have these to basically be the Lego pieces of DeFi to support all your protocols building on top of it. And the next one you would have is the value-added DeFi component. The value-added component includes, for example, guys like Morphines, which actually aggregates all your yield data or your wallet transactions. You have Avenue, Yagi, which is a yield aggregator as well. Carmain Finance, option provider for basically you can buy ETH options, BTC options, USDC options on Starknet, and they can be used as either a trading tools or a risk hedging component for a protocol as well for ourselves. Hybrid native, it's supporting Starknet, and they're a risk monitoring component and also one of our partners. And the last thing I want to highlight for the value-added component, they're not so much DeFi per se, but they are actually great tools to support DeFi. One is Omni Network, which is looking at a portal that's connect different cross-chain rollup, basically. They would be able to act as a doorway, as a portal to help basically Starknet project to get users from Arbitrum, for example, let's say. And Herodotus, it was mentioned a little bit earlier at the panel. So this one is a storage-proof protocol. They can act as a bridge or a cross-roll messaging system. And we can actually, DeFi protocol can use it to act as a bridge, basically. And for us, using Herodotus for their storage proof for cross-chain lending could be one option that we can explore down the road. And last thing, I mean, that would be kind of the directional DeFi protocol. And I put it directional because I can also put use cases, but what I mean by that is that we would have guys like CKX, Carbonable, Brick, or Aspect. These are all actual use cases that, for example, CKX would be a DEX, and there would be a perp trading where you would be able to take position on the market. And Carbonable is one where you actually have applicable use case to buy carbon credits off-chain, and they would get investment on-chain and support on Starknet. Brick and Aspect is NFT projects, and what I mean by that is for directional project, these are projects that actually provide actual use cases to the real world, and all these are building on top of each other. So ultimately, when you have more directional project, the flow onto the transactional ones would actually increase alongside of it. So I think for everyone that's coming in to build, these are all great phases or great columns to build into. But especially if you have innovative use cases or a directional protocol to actually start building on and engage with, let's say, Web2 or engage with some of the traditional finance narratives, I think these will be a great addition to the Starknet ecosystem and Starknet DeFi to be able to start powering the actual usage of it and start to grow the entire scale of Starknet DeFi. The next one I want to talk a little bit about is the architecture of Starknet in terms of layer 2 and layer 3. Starknet is a layer 2 scaling solution on top of the Ethereum. And we can basically break it down into 4 different components. I would say the first one is StarkX. StarkX has been around actually before Starknet. It's a software-specific scaling solution that embeds with, for example, DYDX, Immutable X. And right now it's powering Canvas, Apex, and a lot of different really cool and established protocol, basically as a scaling solution to help them scale the transaction speed and also decrease the transaction cost. And what we are looking at right now for Starknet, it's actually a public Starknet layer 2. It's a general composable layer where a lot of protocol like us, the wallets, the DeFi, the lending protocol, NFT marketplace, these are all building on top, and we can basically communicate with each other. We don't have to do any bridges and things like that. And this lives on layer 2. And layer 3, it's something that it's going to come probably later this year or next year. And they use the technology, which is the recursive proving of Starknet, to basically, when you have a proof of layer 3, you can use that proof and combine with a few other proofs across layer 3 and also layer 2, generate one single proof, and then go back down to layer 1. So all these would have the logarithmic scaling component. So the more transactions you have, actually the computation time will start to flatten off towards higher computation steps. So Starknet, private Starknet L3, it's something that I think it's quite interesting, especially across the institutional space, or even if you just want to use a specific parameter for your protocol. Let's say if for CKLand, we want to have a general composable, permissionless layer 2 where lenders and borrowers can come in and we don't vet them. But what if we want to set, let's say, a specific geographics or specific client tier, and then we would have a whitelisting layer of layer 3, and then so we can have specific users coming onto that layer 3, and for the computation speed of that one, maybe they are specifically for traders, let's say, and we want to support them for their hedging positions, or we want to support them for the leverage position, and they have to be proving much, much faster. So in that case, the layer 3 has the option of basically decreasing the block size so that the computation speed will be a lot faster. And then later on, you would have added the rollup modes and also the Fidelity mode. Talked about this a little bit already. So what that is, it's basically your data availability structure, where you put the data off-chain or on-chain. So ultimately, you will be looking at somewhat of an ecosystem like this, where we will be living somewhere in the middle of layer 2, and we could have, let's say, Apex over here, Canvas over here, and then for CKLAN, we can have another CKLAN institutions, which is a private Starknet, and also on top of it, we may have a specific loan across different lenders and borrowers, and that could be a layer 4 if we need to. So for CKLAN, our operation is relatively simple. Right now, we have launched the right-hand side of the protocol, which is the CKLAN retail DeFi side. It's live on mainnet since middle of May. Right now, we have a TVL of around 1 million, and we support 5 different currencies. And we look to have more features in the next coming months, support more tokens, whenever Starknet support more tokens as well. And later on, we want to start looking at the right side, which is the private Starknet L3, and we start looking at the institutions. And this side actually includes slightly two additional components, one of which would be the KYC or whitelisting to get onto layer 3. And another one is because we want to use, for example, let's say under-collateralized lending or uncollateralized lending, then we would start looking into, let's say, taking on their off-chain and on-chain financial due diligence, and perhaps use CK technology to mask some of these data and being able to generate a proof that, okay, it's saying the institution is good for borrowing, let's say 100 million or 200 million, something along that line. And something down at the bottom, which is not being shown and by design, is that we can have Herodotus, and we can have guys like Omni Network to help us connect with other rollups. So what we see would be a connectivity on Starknet on the front, and then we can live on Starknet and being able to connect with all the other different cross-chain rollups later in the future. And I would like to close the presentation with 2 observations and 2 predictions that I see in the DeFi market. The first one being, right now, it's a pivotal moment between TradFi and DeFi. And I say that because for the past 12 years, we have been on a declining interest rate trend, especially around 2020. Basically, interest rate 0, we have QE, multiple rounds of QE. So DeFi, it's very interesting where people actually get a lot of artificial yields, and people come to deposits, and they would get a lot of a lucrative yield compared to the actual TradFi space. But what we're seeing is that starting from, let's say, 2022 or 2023 forward, I think a lot of you would have agreed that we're on a heightening interest rate environment or high interest rate environment. I don't expect it to come down anytime soon. So what happened is that my first prediction is that a lot of institutions that interact with DeFi at the moment, a lot of them are actually on the deposit side. They deposit money into crypto, they earn yield, they loop, and then they basically take one-sided trade and then basically hope for crypto to go up. But what we see for the next, let's say, a year or 2 years going forward, it's actually a reversal of that. We would start to see institutions coming in on the borrowing side, because what we see is in the traditional market, interest rates are getting to 7%, 10%. And on the DeFi space, you would be still looking at around, let's say, 4% to 6%. Maybe institutions, you add a little bit of premium, 7%, 8%. Still, there's an arbitrage opportunity for institutions to come onto DeFi to borrow. And the second observation and predictions I have is this graph, just decipher a little bit. The red line, it's basically direct lending interest rate, where you would take a middle market, they call it a BDC. Basically, it's just a private investment company. You can think of it this way. And then the middle one, it's the blue line. It's the high yield for bonds return. So the bond return actually goes up and exceeds the direct interest rate. And what that means is it's expensive to borrow direct, and it's expensive to borrow by issuing bonds. So what that actually entails for us, it's bond market will not collapse because it's expensive. You will still have traditional companies, corporates to issue bonds. But when they issue bonds, the market for distributing the bonds in the traditional market might have dried up a little bit. But obviously, because of the high yield, you're now able to use this and tokenize it, and then being able to use this as asset backing to do lendings on chain, and also basically have these as a real yield supporter for whatever actions or whatever yields you're getting on DeFi. So what I'm saying is that my second prediction is the real world asset tokenization and also the asset-backed lending will accelerate in the next year or so. And we start to see financial institutions doing this. They issue their bonds on chain, and I would expect that for a lot of the corporates, when they have issued their bonds, those bonds might get tokenized, and later on being able to truncate to a lot smaller sizes to being sold on chain. Regulatory issues obviously is something that needs to get solved, but I think we have all the component ready. For example, low transaction costs. If you're talking about a single truncate of this bond, it's $100. Having it $15 transaction cost doesn't make sense. But if you're looking at Starknet, let's say about 15 cents, I think it starts to make sense, and you will be able to get a lot more distribution channel this way. So with that, I would conclude my presentation. And if you have any questions, feel free to reach me anytime around here, or you can reach our website. We're hiring, and reach our websites are Discord, Telegram, and also Twitter. Yeah, give us a shout. We would be able to answer as much of the question as we can, and happy to chat with you more in the event. Thank you very much.